Welcome to the Stocks Campus, guys. These first set of videos you will see here are designed to get you up to speed as soon as possible. We have people coming in the Stocks Campus from all different kinds of backgrounds and experience. If you have never really traded stocks, actually have no idea what the markets are. So this first video, we are discussing what markets are, what are brokers, and how to go get yourself a broker account. Markets are simply places where people come together to exchange goods and services. If you have something to offer and someone else wants that offer, then you will come together in a place and exchange. For example, if you have a farmer in Midwest USA and you have an industrialist in New York that wants the product that the farmer is producing, those guys will come together in the Chicago Mercantile Exchange and make a deal. Now, back in the day, people had to be physically present in order to make these deals. That's not the case anymore. Now, a lot of it can happen on the internet. And that's where the brokers come in. Because a lot of it is happening on the internet, there needs to be an intermediary, someone that both the parties trust in order to preside over the deal. And that's what the broker is used for. So if you have to trade the markets on the internet, you will need a broker. In TRW, we have the recommended brokers. We have them in the Start Here channel and in this Google Doc with this link right here. The broker is set up. Everything you need to know about brokers is right there. So we'll have the recommended brokers and what you need to do to get approved by them. So check that out because that will be crucial for your stocks trading journey. Any kind of trading for that matter. So now we know what a market is and we know how to trade in them. So let's move to the different kinds of markets. So the most common market, let's start with stocks. And if you guys have no idea what stocks are, let me cover it up real quick. So back in the day, or most companies, the way they start is they're started by one person or a partnership or a family that builds it up from scratch. It's a private endeavor. And then at some point, the company needs cash in order to expand. So what they would do is they would come in the market and sell a part of the company to the public in exchange of cash. Now that cash can be used for expansion. It can be used to pay off debt, whatever the private endeavor wanted it for. All right. So once the part of the company is sold in the public market, it's called a share or a stock. So just remember, whenever you're buying a stock, you're owning a part of the company. That's what the stock market is. Now, you can also buy currencies. That's where the currency market comes in place. You can also buy the government debt. So in that case, you will be giving money to the government and then the government is supposed to pay you back your money with interest. And that's what the bond market is. And the final, you have the commodity markets, which cover everything from agricultural products to metals to gas, energy, all the physical things that we need from our day-to-day life. So those are the main kinds of markets. If I missed something, don't mind it. But those are the main markets. And we'll mostly be focusing on the stock market here on the campus. But we do have discussions in the commodity markets as well as currency markets. If you guys want to bring that up, do not be shy. All right, that's it for the first video. In the next video, we will cover how to look at the price in these markets and get a feel for what's going on. Welcome guys to the next installment in the beginner series. In the first video, we discussed what markets are and how one can trade them through brokers. In this video, we are going to discuss the very important aspect of understanding what's going on in each market, and that's through reading price charts. Now, each broker has their own charting stuff available, but we recommend to use TradingView as it's one of the best charting platforms out there in the industry. The tools available, the connections available is just amazing. So that's recommended and it has a free option. So you don't really have to worry about the price either. Now, when you open TradingView, this is the first screen that's going to come up. You would go to these products and look at the chart. So let's see what we find out. The first chart that they open up is of Apple. Now that's not a surprise. Apple is one of the largest companies, so it's an easy one to start with. On this chart, you can see that on the y-axis here, you see the price of the stock, which is Apple in this case. And then on the x-axis down here, you see the time. This defines what the price of the stock was and at what time. On the right side of the screen, you see a watch list where right now you see stocks, futures, some currency markets, and just the prices you want to keep track of. You can obviously customize it based on your own needs. Each one of these drawings shows the price action of a day. Now, the reason it's a day is because we're on the daily time frame. You can obviously change it to 1 hour, 15 minutes, whatever you like. So each one of these drawings, which is called a candlestick, each one of these candlesticks gives you 4 data points. Where the price opened that day, what was the high of that day, what was the close of that day, and what was the low of that day. So on Friday, 3rd of Feb 2023, open price was 148.03. The high was 157.38. The low was 147.83. And price closed at 154.5. Now, if you have no idea where I read those numbers, those are on top of the screen screen right here. But those numbers change with each candle, which is why I kept it together. So each one of these candlesticks is telling the price action of an individual day by defining 4 important points: where price opened, where price closed, what were the high of the day and the low of the day. And that way we can have an idea of what Apple's stock price was doing all the way in this time frame from September to Feb to March. Right now, Apple is around $150, and that's what's showing here. If we change the time frame, if you go to an hourly chart, you would be seeing each one of these candles is defining the price action of 1 hour. All right. You want to change the time frame of all of this to New York time, so all of you guys have an idea of when the market is open and closed. So if you look at this candlesticks, it's showing the action on the March 3rd at 9:30 a.m. New York time. That's when the market opens. You will see the open, high, low, and close for each candlestick. So that's about it. I want to show on TradingView here. Now I'm going to move to my chart, because if you're using TradingView without having an account, they will probably have a pop-up soon asking you to join a free account. If you have any questions, we have 2 chats. One is Lost Souls here. You have any problems, any kind of questions, you just ask and I will respond. Or you have a new chat here, and that should be mostly basic questions about trading. Once you go to Trading Basics Price Action Pro, I will refer to the charts a lot more. This is why it's being introduced right away. All right, so let's come back to charting. So I have another TradingView here. I have the same Apple chart. I have my own watch list. You probably have seen in trading knowledge about trend lines and levels, indicators as well. Those will all be covered in the next video. We will be going through indicators, what kind of tools to draw. So something like this, I'll give you an example. If you have an important price level, you will draw a line here denoting it. I just took it out of nowhere, but if you go back in the chart, you will see this level acted as support in March of 2022, acted as resistance in June of 22, acted as support again, acted as support, acted as resistance, resistance all the way here, acted as support. So you can see that's a price level where price keeps reacting. And that's why those are the levels you want to denote with horizontal lines, but we'll go in depth about this in the next video. Let me clear out some trading lingo in the meantime. Right now, I just mentioned support and resistance. If you don't know what that means, it's very simple. It just means when there's a support and price comes to it, price should stay supported, aka it should not break below it. The name gives it all. When it's a resistance, so if price is coming from below and this price level is a resistance, it means price will find resistance to proceed here, aka it has a higher chance of getting rejected. That's why it's called a resistance. So the same level can be a support when price is coming from above and a resistance when price is coming from below, right? Simple enough. There is another trading lingo which we will use almost mindlessly, and that's why sometimes I forget that the beginners might not know, is called going long and going short. So what does going long mean? Going long means buying something in order to sell it later at a higher price, all right? Going short means selling something in order to buy it back at a lower price. Now, how can you sell something if you don't have it? You will borrow it from your broker, you will sell it, then you buy it back at a lower price and give it to your broker. That's what's called going short. Obviously, you don't have to know the technicalities or the details about it, but that's how this progresses. All right, I think that's enough for this video. In the next video, we'll look at the drawing tools, trend lines, horizontal lines, and all of those good things. Welcome guys to the 3rd installment of the beginner series. In the last video, we discussed whatever you were seeing here on the chart, candlesticks, time frame, the price, as well as the time on the x-axis. Now let's discuss some drawing tools that will be helpful for you in your charting. Let's remove this watch list first and expand the chart here. So in the last video, I had already drawn out this horizontal line and I had showed how this was a support and a resistance while explaining the meaning of those terms. To draw a horizontal line, go here. Then you pick up the line and you will draw that to mark out important levels where price sees some form of sensitivity. So you can see this level I just marked out, 155 level. In the future videos, you will learn it's called a zone. And the reason is that price is constantly reacting to this level. So you can see price came to this level, got rejected. So this acted as a resistance. When I say got rejected, it means price went down after touching a level. Acted as a resistance again on the 15th of Feb. Acted as a resistance again on 6th of March. Acted as a resistance back in the day in October, right? Acted as a support all the way in April and acted as support all the way in Jan. You can see that's a price level where price always sees some form of reaction. And those are the levels you want to mark out with horizontal lines. The next one we'll see is trend lines. Trend lines are usually used to, as the name suggests, mark out a trend, which means a sequence of higher highs and higher lows. It's very commonly used in trading and technical analysis. I don't use it personally as much, but just wanted to share it with you guys in case you prefer them. So the way you draw it is you will connect these higher lows here. So something like this, and voila. You can see this trend right here is being marked by this line. It's being defined by it. Once it breaks, it retests and bam, it goes lower. We can also draw a downtrend line. So this was an uptrend line because the trend is going up. Downtrend line would connect the highs, something like that. Once these two highs were made, we could draw this trend line, and then price came back and got rejected from this trend line a couple of times. Only when we finally broke this trend line did we have a move up. So this is how a trend line is used, and a lot of technical analysis people use it. Again, I personally don't use it as much, but I know it can be useful, which is why I'm sharing it with you here. Next drawing tool, which I use quite a bit, is boxes. So my entire system is based on them. So boxes are usually drawn between the horizontal lines in order to define an area of contraction. So something like this would be a box. It's just a sideways area of contraction. Now, if you don't understand why this is a box, let me draw the horizontal lines we had again. This area, and we had another, this area. So you can see price contracted in this region for a while before it expanded lower. If you want to make a bigger box, like something like this, I go into detail in the price action pro tutorials about boxes and how to use them completely. So if you don't get this right now, don't worry about it. So this area, you can see from December 21 all the way to January of 2022, price in Apple did not really go anywhere. It just went into a sideways consolidation. And for this consolidation, we define it using boxes. So that's what the boxes are useful for. And once we break out of this consolidation, you can see price move directionally, and that's called an expansion. So those are the main drawing tools that we'll need in our journey. Now let's talk about some indicators. I know most of the guys come in trading thinking there's a magic indicator that will solve all their problems. That's usually not the case. I will share the indicators that I use, and then you can see if that works for you or not. So the first one is moving average. So I use two kinds of moving averages. I use 9 and 50. The way you change the setting is you go here in the settings, go to input, and you will change the length. This one is 9, so it's perfect for me. The next one, I will change it to 50. And I will change the color to yellow. So now you have these moving averages, and what the moving average basically means, it just shows, it's a line showing the average price of the last 9 days in case of a 9-day moving average, and 50 days in case of a 50-day moving average. Now, if you change it from daily to hourly charts, it will show you the average price of the last 9 hours rather than 9 days. Okay, so the moving average depends on the time frame you're trading it. So let's go back. So this is the indicator I use quite a bit. Obviously, there's a tutorial on it that will go in depth about it. But put simply, it just shows the average price of the last 9 days. If the average price of the last 50 days is rising, then you can assume that the stock is in a medium-term uptrend. Okay, that's how I use these moving averages. Only other indicator that I use is called Squeeze Pro. You can have it on your chart is this one. Now the settings here, the one that I have are a bit different just because I am blue-green colorblind. Like I have a difficulty figuring that out, which is why my settings are in the Gold Archives channel. I can point it out to. So this Gold Archives channel here, that will have my settings as well as all the other useful information from professors as well as captains for you to check out. These are my Squeeze Pro settings right here. Let's go back. So change your settings there accordingly. But what these different dots on the bottom tell you is how tight the contraction in the stock is. And based on how tight it is, how big the expansion will be. Again, if you don't completely understand it, that's fine. In the Price Action Pro, I have a fully dedicated tutorial on Squeeze Pro. So you will be fine. Just, you see, I'm trying to desensitize you to the terms rather than throwing it all at you later in the course. All right, for now, that's it for the beginner series, guys. See you in the trading basics.